The future of money isn't coming. It's already here, quietly reshaping the way global capital moves, and most people don't even notice. Abu Dhabi Finance Week 2025 didn't feel like a normal finance conference full of flashy charts, buzzwords, or speculative predictions. Instead, it focused on what's already being rebuilt, the very infrastructure of global finance. Their theme, Engineering the Capital Network, wasn't just a slogan. It was a declaration that money today isn't about products or markets. It's about systems, the hidden rails that move billions, the pipelines nobody talks about, and the architecture that will define the next century of wealth. And at Abu Dhabi Finance Week, the signals were clear. The world's financial power is quietly shifting, faster than anyone expected. For decades, capital moved slowly. Deposits in banks, trades on exchanges, settlements days later via clearinghouses. Cross-border investments took weeks, tangled in paperwork, legal checks, and custodial layers. That world worked when trade was slower and local. But it doesn't exist anymore. Today, investors demand speed, transparency, and frictionless global access. The old system can't deliver that. That's why the conversation at Abu Dhabi wasn't about products. It was about networks that can move money, track ownership, and settle instantly, anywhere in the world. At the heart of this shift is asset tokenization. Real-world assets, bonds, buildings, investment funds are being converted into digital units recorded on blockchain-style ledgers. These tokens can be fractionally owned, transferred instantly, and settled in minutes instead of days. Imagine a bond issued in Abu Dhabi, tokenized on a secure platform. An investor in Tokyo buys a fraction and ownership updates instantly. Settlement is final, no paper, no delays, no middlemen. This isn't futuristic speculation. It's happening now. First Abu Dhabi Bank, working with HSBC's digital asset issuance platform, is preparing a blockchain-based bond from MENA, the first of its kind. The digital capital network is no longer optional. It's starting to replace the old rails that governed global finance for decades. Tokenization changes everything. It democratizes access, letting ordinary investors own slices of assets that were once reserved for the wealthy. It increases speed, slashing settlement risk, and improving liquidity. It builds transparency, recording ownership and transaction history in real time, reducing errors, fraud, and opacity. It enables new financial products, tokenized real estate, bonds, funds, and even sustainable finance instruments, unlocking capital flows on a global scale. Institutions managing over $62 trillion in assets attended ADFW 2025, signaling that this isn't a niche experiment. This is the mainstream of global finance being rebuilt, quietly and irreversibly. But speed without security is chaos. That's why infrastructure dominated the discussions. Banks and fintechs are building digital vaults, compliance systems embedded in code, smart contracts for settlement, and identity verification integrated into platforms. Regulators are moving alongside innovators, writing rules into the network itself instead of chasing them afterward. In Abu Dhabi, innovation and regulation are now working in sync, creating a system where tokenized assets can be institutional-grade, secure, and trustworthy. One of the most striking shifts revealed at ADFW 2025 is the convergence of traditional banks and fintech. For years, the narrative was banks versus crypto startups, but now it's how do we build systems together? Banks bring capital, trust, and compliance. Fintech brings speed, automation, and global rails. Alone, neither can build a modern capital network. Together, they're bridging old and new, creating an interconnected system where API plays outdated cores. Blockchain interacts with legacy ledgers, and compliance systems enforce rules automatically. The result is not disruption. It's connection. Finance is no longer split into old versus new, but split into networks that work and networks that don't, and these networks don't obey geography. Traditional finance has long revolved around hubs like New York, London, and Hong Kong. Capital flowed in, out, and through them. Digital native assets move differently. A tokenized asset issued in Abu Dhabi can be bought in Seoul, traded in Lagos, and settled in Frankfurt. The rails move 24/7. Borders, time zones, and outdated market hours matter far less. Countries and institutions that build robust, interoperable networks first gain outsized influence. That's why Abu Dhabi isn't just positioning itself as a financial hub. It's becoming a bridge for global capital flows. The faster and more connected your system, the more power you hold in this new financial world. Sustainability was another core theme at ADFW, integrated into the very design of these networks. Tokenized bonds and real-world asset tokens allow capital to flow conditionally, only if environmental or social criteria are met. Carbon credits can be digitized and verified in real time, impact measured and audited on-chain, and investments structured to reward sustainable behavior automatically. Finance becomes not just faster, but smarter, more responsible. Money can guide action rather than just record it. The network doesn't simply move capital, it shapes values. Beyond the mechanics, Abu Dhabi Finance Week 2025 revealed the new logic of influence in global finance. It's no longer the biggest banks, the largest stock exchanges, or the countries with the oldest markets that hold power. Influence flows to the architects of networks, the people who design settlement rails, define interoperability standards, and integrate compliance and transparency at the protocol level. Whoever builds the network first doesn't just control transactions, they control who can participate, where capital flows, and which financial behaviors are rewarded. By the end of Abu Dhabi Finance Week, one reality was undeniable. The future of money is controlled not by single banks, exchanges, or governments, but by networks. Once the network is built, the old financial world doesn't collapse. It becomes irrelevant. Liquidity flows where settlement is instant, transparency is guaranteed, and trust is embedded in the system. Capital moves where the network is strongest, and that network is growing faster than anyone expected. Of course, risks remain. The global securities watchdog, IOSCO, warns that tokenization introduces new vulnerabilities: investor confusion over ownership, counterparty risks if issuers fail, and fraud if due diligence is weak. Liquidity in secondary markets can still be a challenge, with tokenized assets often facing low trading volumes and long holding periods. This isn't a utopia. It's a careful, high-stakes build that demands regulation, education, and robust infrastructure. But the direction is unmistakable. The blueprint for the next century of finance is being laid now, right before our eyes. For investors, this means global real estate, private credit, and traditionally exclusive assets are becoming accessible through digital tokens. Fractional ownership, liquidity, and round-the-clock markets aren't ideas anymore, they're realities. For institutions, the race isn't about launching the largest market, but building the rails that others depend on. For regulators, the challenge is unprecedented: how to foster innovation, ensure transparency, and protect investors in a borderless, instant network. For everyday citizens, finance is becoming global, accessible, and programmable. We are not just witnessing a financial revolution. We are living through it. If this perspective on modern finance gave you a new understanding, hit like so more people can see it. Subscribe for deep dives into how money, systems, and power are evolving, and share this with someone still stuck in the old financial mindset, because the future is already being built, and it's running on networks, not banks.